Well, welcome to part two of the pattern strategy videos. And I've been thinking, when I started this out, what I thought was going to happen was we were going to just briefly go through some of these indicators and patterns and show you what was going on. Then I was going to use the manual trader to expert to execute some orders, show you what that's all about, and that would be the end of it. But now I'm beginning to think if you are going to actually learn anything here, how to trade with these patterns, it's going to be quite a bit more involved, and there's going to be several videos on this topic. Now, I want to make a note also that there's a lot of things that I take for granted. Probably a lot of seasoned traders would take for granted that they don't convey to you. They're little subtle things they've learned over time that are really important, but are trying to make it simple, and so they gloss over these things if they mention them at all. And I think that's what I was doing a bit. I want when I first started to trade, I first filled up a spiral notebook full of pictures and notes on these different patterns and how they interact, and then I started printing out all of the charts and using a word to try to explain how all this works, and I filled up a 3-inch 3-ring binder full of stuff, and occasionally I go back, look at it, I try to make some sense out of it, or put it in some kind of framework that somebody will understand. But I think the most important thing here is that if you are getting into this business of trading, I don't care if it's stocks or commodities or futures or whatever it is, it's a really, really, really good idea to start a notebook and keep notes on what you observe happening in the markets. And it's going to grow exponentially over time, because there's things that change. And perhaps one of the big issues here with all the manual trader or suggestions I get for trying to make a indicator-based manual trading program work is that it's way too simple. It's just not possible to consistently trade on a very simplistic moving average type of a format, and actually I don't use it. Patterns have nothing to do with indicators. There's no indicators in the patterns, and only for rough reference or as another reference point, and as I mentioned, to sometimes use them to stabilize entries. But it's a bigger, much bigger package in my view, if you really want to be successful, as to how understanding all these influences in the market, what actually creates these spikes. I mentioned a bunch of things besides just these steps and spikes. I mentioned the resistance levels. I mentioned the time when the market becomes more active. I talked about this wedge formation, and there's the trading channels issue, but it's not just the one thing. It's all of these things you're looking at, and in addition, you're weighing the importance, the relevance of all these pattern indications as to what the overall picture is going to come out like. So the whole idea being here, you need to be predictive, and that is probably something that is the most difficult. How do you decide which indicator, which pattern is more important at this particular moment, how it relates to the other patterns. That is just something you have to gain over time. Now, right now, I'll just show you that what my prediction was as to what was going to happen here is exactly what did happen. And I instituted a trade on this breakout. We saw this long bar start. We had the spike indicators showing us we're going to be probably headed on down. We got another strong spike in here, which showed us we're going to be continuing on down. We broke and once it breaks a resistance level, then it usually will take off for a whole bunch of pips sometimes. I instituted a trade. I could have left this thing going. I decided to go to bed instead, and because right now all I'm primarily interested in getting the expert to trigger properly and get some rest, and then go back and clean it up. And we're going to be trying some other things with the symbol issue. You want to monitor the videos on the broker compatibility if you want to keep up with those programming changes and what we're going to do from there. But right now I'm going to talk about a little more about these patterns, and here I want to show you a couple of other patterns that are, I think, the best I love these patterns. I call them rounded tops and rounded bottoms. This is a rounded top. What this means is when it all comes down to, in my opinion, at the core issue of how the market moves, what drives the market is momentum and velocity. Velocity means how fast this is going. Momentum means how consistent and strong the move is. We got a real good momentum going down through here. We can measure that momentum by these steps. When we get a flat step or virtually no step here, that means we've got still this stronger momentum going down here, a flat step. When we start getting this retracement, these little retracements, then the momentum is starting to stall out, and we know we're going to be getting some type of stall or reversal here at the end of this. And there's also what happens, we got to be starting getting careful down in here, because you will get this these strong moves down which look like they're going to take off, but they don't. They retrace, and that's at the end of this momentum cycle. We get in these we'll get more of these spikes. Now there are different spikes down here. They're at these tops and bottoms, and there are on the way down, and those also mean something. So rounded top, let's get to a little bit about why a rounded top and bottom is a good thing versus these what I call these dynamic tops and bottoms. Very rapid moves up and down. Any rapid move up is going to trigger a rapid move down, and if you get in this cycle of rapid move up, rapid move down, you really don't know what is going to happen. But one thing is for sure that's going to happen is you're going to probably get nailed going the wrong direction. You're going to think this, oh man, we got a long, strong move here. We're on an uptrend, and you kick in about here, and what happens? It reverses and you're out of it.